For most of us, tax season is just this headache we deal with once a year. It's a chore, right? But what if, just what if, that's the completely wrong way to think about it? What if the entire tax system isn't just a rule book, but it's actually a strategic framework with its own hidden logic? That's exactly what we're going to dig into today. The big difference between just paying your taxes and actually understanding the game. And really, that is the central question, isn't it? Because how you answer that determines whether you're just another taxpayer or if you're a strategic wealth builder. The system isn't just built to collect revenue. No, it's designed to guide your decisions using a powerful but often invisible set of incentives. All right, so here's our game plan. First, we're going to pull back the curtain on the real purpose of the tax code. Then, we'll talk about shifting your mindset from just compliance to actual strategy. And that's where we'll unlock powerful tools like paper losses. We'll even see how you can achieve a special status that literally changes the rules for you. And finally, we'll connect all of this to the government's own finances to give you a completely new framework for your money. All right, let's dive right in with the big why. Why is the tax code so incredibly complex? Well, it turns out it's not just about collecting your money. So here's the key insight. The government actually uses the tax code to motivate us to do certain things. I mean, think about it for a second. It would be totally impossible for the government to provide all the housing we need, or develop all the energy, or create every single job. So instead, what does it do? It offers tax breaks to private citizens and investors who are willing to do that work. The code isn't really a punishment. It's a series of rewards for helping the government achieve its goals. Okay, so that idea brings us to what is probably the biggest blind spot for most taxpayers. We're all taught to do our taxes, but that simple phrase hides two completely different, and I mean completely different approaches. Let's break them down. And this right here, this shows the huge difference in mindset. Tax compliance, which is what most tax preparers do, is all about looking backward. It's about accurately reporting what already happened last year. It's totally reactive. But tax strategy, well, that's about looking forward. It's about structuring your finances today to legally minimize how much tax you'll owe tomorrow. It's 100% proactive. And listen, this isn't just some academic difference. It has a massive, massive financial impact. In-depth analyses show that millions of people think their tax professional is focused on strategy, when the reality is their main job is compliance. Now, it's not malicious or anything, it's just a different focus, but the result is the same. Without a proactive strategy, people can end up overpaying by tens or even hundreds of thousands of dollars over their lifetime. Okay, so how does this strategy actually work in the real world? Well, one of the most powerful tools out there is the paper loss. This is where you can legally reduce your taxable income without actually losing a single dime of cash. And the key that unlocks this whole thing is a concept called depreciation. So here's how it works. In a nutshell, the government lets investors, especially in real estate, treat a building as if it's an expense that's wearing out over time. This lets you deduct a portion of that building's cost every single year. For residential properties, it's over 27.5 years. This creates a loss on paper, even if the property is actually making you money every month. Let's just walk through the play-by-play here. It's pretty straightforward. You buy a property. Then, every year, you get to deduct a little slice of the building's value. And that deduction can be big enough to completely wipe out your rental income on your tax return, creating a loss that you can then use to your advantage. And this is the absolute kicker. This is the part that sounds almost too good to be true, but it's right there in the code. The government is literally letting you claim a loss on an asset that is almost certainly increasing in value. So you're building wealth and a growing asset while legally telling the government that for tax purposes, it's losing value. This is a huge cornerstone of tax strategy. But wait, it gets even better. For people who really want to get strategic, you can accelerate this whole process with something called a cost segregation study. This is basically an engineering-based analysis that carves up the property into different components. So instead of depreciating the whole building over decades, it identifies things like carpets, fixtures, and appliances that you can write off way faster, like over 5 to 7 years. This front loads all your tax deductions, giving you huge savings in the early years you own the property. Okay, so you're probably thinking, this sounds amazing. And it is. But there's a catch. You can't automatically use these powerful paper losses from real estate to wipe out the income from your main job or business. See, the tax system has different tiers of rules. And to unlock that ultimate benefit, you need to qualify for a special status. It's a special designation called real estate professional status. And trust me, it is an absolute game changer because it lets you use those investment paper losses to directly lower your active job income. But to unlock this powerful benefit, you have to prove to the government that you're serious. You have to meet 2 key tests. First up, the time commitment. You need to log at least 750 hours during the tax year in real estate activities. This could be anything from managing properties to development, but the key is it has to be documented. And number 2, that time has to be more than half of all the time you spend working during the year. This basically proves to the government that this is a primary focus for you, not just a side hobby. And here's a really critical detail. Only one spouse in a married couple needs to meet these tests for the whole family to get the tax benefit. Okay, so why? Why on earth would the government create these incredible incentives? To get the real answer, we have to zoom way out from our personal finances and take a look at the government's own balance sheet. This analogy really puts it all into perspective. Imagine that. The government consistently spends way more money than it brings in through taxes, and it's already carrying a massive pile of debt. Now, when you're in that kind of financial hole, you can't afford to do everything yourself. You have to incentivize other people to help you achieve your goals. I mean, just look at these numbers. The debt hasn't just grown a little bit, it has absolutely exploded. And the most telling number here is the debt to GDP ratio. Back in 1980, the debt was about 1/3 of the country's entire economic output. Today, our national debt is significantly larger than our entire economy. That immense financial pressure is exactly why the government has to use the tax code to get private investors to step up. So, when you put all of these pieces of the puzzle together, a completely new picture starts to emerge. This isn't about finding some shady loophole. It's about understanding the real rules of the game that the system itself has set up. All right, so let's recap this new framework. Let's boil it all down. First, the tax code is really a system of incentives, and those incentives are driven by the government's own financial situation. Understanding this means we have to shift from just reactive compliance to proactive strategy, using powerful tools like depreciation to create those paper losses. And for those who are willing to go the extra mile and get special qualifications, the benefits become even more amazing. You see, thinking about taxes this way, it changes everything. It's no longer just a liability you have to pay. It becomes a system to be understood, to be navigated. The question stops being, how much do I owe? And starts being, how am I responding to the incentives the government has laid out for me? Now that you can see the game board a little more clearly, the next move is yours.